Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, today I want to talk about flies, so call flies in this case, and it's always kind of like a discussion whenever I bring up trading call flies or put flies on the VTF, and I know I've spent time talking about it in videos before, but I feel like people have a love-hate relationship with them, and they definitely are. I feel like there's definitely pros, there's definitely cons. Some people absolutely hate them. Some people really like them, and I mean, I think like basically all of trading, it kind of comes down to the setup, and maybe just like how that individual setup um, kind of presents itself, right? Because not every stock will work well for flies. Not every setup is going to work well for flies. They're very, I feel like you really have to have like a particular pattern for it to like line up well. And Qualcomm, just going to use it as an example, but just to talk about flies in general. But this was a recent trade, right? And what I was looking at going in was just like this really nice breakout that was taking shape, right? So, I mean, I feel like anybody that really follows stocks, they realize that the chip stocks or the semis really have been acting great. I mean, Qualcomm started to break out a couple weeks ago. The chip stocks started to move higher, and then like the 5G plays. So last week you had Corvo, QRVO, which really kind of got this thing moving higher. So, it kind of ran into the report based off of sector strength, based off pure strength. So expectations are high, right? Now, I normally don't like to do, or I tend to avoid stocks that have pretty big moves into earnings, just because I feel like expectations get very one-sided. With Qualcomm, I still kind of like the idea because it was like a kind of like a breakout with like a clean, clear target above, right, 90, and I felt like it was one that maybe still had
Tells
some room to
utilities to
go,
secure more
but
than 3 GW of new power.
definitely acknowledging that the stock was up a decent amount going in and expectations were higher. I just felt that the option pricing was a little bit elevated, right? Maybe like the stock was just not going to have like a huge reaction. If the numbers were good, then people would say, okay, that's what we expected. Maybe it doesn't have a huge move higher. So what I was thinking was some sort of strategy to get the premium down, right? So get that near-term implied volatility down because I thought that the near-term options were expensive in favor of a possible like longer-term swing, right? Thinking that maybe this quarter earnings weren't going to be a huge event, but the stock seems like it's on a path to retest 90, especially if the sector acts strong. So short near-term volatility in favor of longer-term volatility. Now, could have looked at maybe a few different ideas, like debit strategies. You could do calendar spreads. You could do long-term call spreads, right? Because that'll kind of smooth out the near-term higher implied volatility. I went with call flies in this case. It was December 90, 95, 100 call fly, and really just again kind of like that, like the same idea. A strategy like a lower debit strategy kind of helps smooth out some of like the more expensive close near-term contracts, and really what I was looking for was like a move higher into like the 90 range through like December. Not like materially past 100. I mean, that would blow up the fly, but basically anything like low 90s to mid 90s would be ideal through that December time frame, right? Normally, when I drop like a fly, I kind of like to set the midpoint right at like a resistance range. But just with like the way like the contracts were offered here, like I couldn't really design it around this 90, or at least not in a way that made sense. So this time it was like the 90, 95, 100. But normally I like to design the midpoint of the fly, so like the strikes around the resistance range. Okay, so had this played out a little bit different, maybe it could have used 90, so like the resistance, so like 89, 90 as like the midpoint of the flies, thinking that if it gets there, it could stall, right? Could form a little bit of resistance there again. So just normally that's how I do it. This time was a little bit different, right? Now, one thing that it's also kind of important with flies is liquidity with the options. Okay, so you'll notice that Qualcomm, right, ton of volume and tighter spreads. So you're not really seeing like really wide bid-ask spreads. I mean, right now these are December options, so these are even a month out to expiration. But look at the 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 90 calls, right? Only like 5-10 cents. Versus like, I mean, some of like the other options are even like tighter. I mean, you're looking at maybe like a few cents, right? So basically, like you don't have a lot of slippage risk because the contracts have pretty tight spreads. You have you've pretty well traded contracts, so like plenty of volume, right? Which is also really important. So it's a little bit easier to get in, a little bit easier to get out, which is really important when you have like a multi-leg strategy. Okay, so like that's something you want to like factor in when you're thinking about doing like this strategy. If you're targeting something that doesn't do a lot of volume or the spreads are a little bit wider, it really could present like a serious issue when you're trying to like get in or get out. All right. So long story short, right? I mean, it had a nice move today, popped, hanging up there around like around 90, and now in terms of like exiting, right? Like it can be tempting to like take like the quick move because like the contracts did gain, great, like the position did gain, but really like the way you want to do this is you stand to benefit more if the stock can stay up here because now like the implied volatility and time should start eating away at the contracts, right? Because you had like the contracts were bid up due to that due to earnings, and like now that the catalyst gets removed, you should theoretically start to see that kind of come down a bit, right? So I mean, unless you're worried about it like pulling back sharply or rallying sharply to like go through the top, really like the way you want to handle it is to kind of like sit and be patient, right? Because time is going to work in your favor in this case because like you really want that time value to erode because like the stock is right at or in the money for like the bottom of the strike, right? So it's you could look at it a couple ways. Like you could take maybe like the preliminary move, but to really get more out of the position, you have to sit tight and just let that data eat away, let the implied volatility kind of get like a crunch, right? See the premiums come down, especially like today. I mean, there's gonna be a lot of volume in those contracts. A lot of people like bidding up those out of the money options. So in particular, it's one of those days where it might be smarter to be patient with these type of plays. All right. So you can see like there's a lot of moving parts and pros and cons when it comes to flies, but they are definitely an interesting strategy. And I mean, there's certain areas where I mean they could really like help you out. Especially if you're trying to target some sort of contracts that are expensive, whether price wise or maybe implied volatility wise. So they definitely have their usefulness. But like everything, it's really going to come down to the setup and in particular sometimes like the options themselves. So a few things to make note of. I mean, like I said before, like every time I talk about flies in the VTF or do videos, like there's always a bunch of questions. And like I said, people either love them or hate them. I'm kind of in the middle. I feel like they have their utility, but I also realize that there are drawbacks. So really all comes down to the situation. All right. So if you like these videos, or if you are looking for information about options in play, like the trade ideas or the newsletter, follow up with the link in the description of the video. If you have any questions or comments, I'd love to hear from you. Have a wonderful night, and I will talk to you all tomorrow.